99% of the crypto space is staring at the daily noise and panicking over minor price fluctuations. A quiet storm is brewing on the weekly charts that almost everyone is completely missing. If you feel like you are just spinning your wheels waiting for a real breakout, you need to lift your eyes to the macro view. The prominent crypto analyst on X, Dark Defender, has just dropped a brand new weekly chart analysis that suggests the long, painful waiting period is wrapping up. We are looking at a structural setup that points directly toward an explosive Wave 5 surge. We are talking about a technical roadmap that doesn't just target previous highs, but points straight into double-digit territory. So in this video, we are diving deep into this specific structural thesis. We will look at why the analyst believes the macro bottom is officially locked in, map out the critical Fibonacci targets standing between us and double digits, and examine the momentum shift that is quietly happening behind the scenes. Alright, so how is the weekly chart secretly preparing for a trend reversal? So let's unpack the core structural framework presented by the analyst here on X, Dark Defender. The analysis is built on the foundation of Elliott wave theory, which tracks market cycles through repeating patterns of 5 impulsive waves and 3 corrective waves. According to Dark Defender's chart right here, the massive XRP rally we witnessed in late 2024 was the completion of wave 3. Since the peak, we have been trapped in a prolonged grinding wave 4 correction. Historically, the wave 4 is designed to test our patience. It is a slow, frustrating phase where weak hands get shaken out. But here is where it gets highly interesting. The latest price action shows XRP hitting the lower boundary of a massive long-term ascending channel. The analyst points out that this exact lower boundary is where wave 4 has finally found its floor. With the correction phase technically resolved, the next logical step in the cycle is wave 5, the final, most aggressive, and most explosive leg of the entire macro structure. Now, here's my opinion. My opinion on this setup is that patience is about to pay off in a spectacular way. If you look at the history of major market cycles, the shift from wave 4 correction to a wave 5 impulse is always the hardest point to identify in real time. It happens when sentiment is at its absolute lowest. Think of this transition not like a spring compressing, but rather like a massive bow being pulled back to its absolute limit. The further back the string is drawn during the correction, the more force is stored. The moment the release occurs, the arrow flies with incredible speed. That is exactly what we are seeing here. While the average retail investors are giving up, the structure is quietly aligning for an incredible launch. So to me, this looks like a textbook accumulation zone where smart money is positioning themselves before the crowd catches on. Now, what major price milestones are on the horizon for wave 5? A structural move of this size does not just happen in a straight line. Dark Defender's analysis provides a highly structured roadmap using several critical Fibonacci extension levels to mark the path forward. The first key milestone on the board is the 100% Fibonacci extensions, which sits right at 0.9327. Once the momentum clears that level, the next target is 123.60%, and that's at $1.2193. If the buying pressure continues to accelerate, we look upward to the 161.80% extension, and that's at $1.8815, followed by the 200% level at $2.9032. From there, the chart points to a major historical target, which is 261.80% extension at $5.8563. But Dark Defender's projection does not stop at a new all-time high. The projected path of wave 5 actually extends completely through the upper boundary of the long-term channel, carving a path past $8 and heading straight toward the $10 region. My personal opinion here is that these individual price targets are crucial for maintaining emotional discipline during a major rally. When a run starts, it is very easy to get swept up in the hype and lose track of the actual structure. Having these precise mathematical levels, especially the targets at $1.2193, $1.8815, and $2.9032, gives us clear goal post. I personally believe that once we clear the $1.8815 mark, FOMO is going to kick into overdrive. That is where the general public will start buying, unaware that they are chasing a move that is started way down here. While a double-digit price target of $10 might sound completely wild to the average person, it aligns perfectly with the historical math of a true Wave 5 macro expansion. We must stay grounded, watch how the asset reacts at each individual level, and let the structure play out step by step. Now, why is the hidden bullish divergence creating massive waves of optimism? While the price chart itself looks incredibly clean, the real confirmation of this trend reversal comes from the momentum indicators. Dark Defender's chart highlights a highly significant technical event, which is a hidden bullish divergence on the weekly relative strength index, or the RSI, right here. The analyst circled two distinct lows on both the price chart and the RSI to illustrate this pattern. So they are right here. While XRP was revisiting and testing this support near the lower boundary of the ascending channel, the weekly RSI was actually printing a much higher, stronger low. Currently, the weekly RSI is hovering right around the mid-30 range. This tells us that even though the price was testing deep support, the underlying selling momentum was rapidly evaporating. The bears are running out of steam, and a massive shift in power is underway. So, my personal opinion is that this hidden bullish divergence is the single most important piece of the puzzle. Price can be manipulated in the short term, but weekly momentum indicators rarely lie. Think of this divergence like a massive ocean wave. On the surface, the water might look perfectly calm, but underneath, a powerful undercurrent is shifting direction. When the weekly RSI prints a higher low while the price is resting on a major channel support, it tells us that the selling pressure has been completely exhausted. So in my view, the mid-30 range on the weekly RSI here is an absolute gift. It means the asset is technically reset, cooled down, and has an enormous amount of runway to climb before it ever reaches overbought territory. This is the fuel that a Wave 5 surge needs to actually reach those double-digit targets. Now, which critical price levels must we defend in the coming weeks? Even in a highly bullish macro setup, we must remain realistic and watch out immediate levels. According to Dark Defender's outlook, the lower boundary of the ascending channel is our absolute line in the sun. This trend line has acted as a solid rock during the recent pullback, and keeping the price above this boundary is what keeps the entire Wave 5 thesis alive. On the immediate upside, we have some overhead supply to clear. The analyst identifies $1.2193 and $1.8815 as the next critical resistance levels to watch. A clean, high-volume weekly close above these 2 points will serve as the official green light that the macro uptrend has fully resumed. So my personal opinion is that we must stay incredibly disciplined here. The market is going to try to shake you out one last time before the real move starts. So I am keeping my focus entirely on that lower channel support boundary, and as long as we hold this line, all the daily volatility is just white noise designed to take your tokens. I personally expect some short-term consolidation and grinding around $1.2193 level as the market prepares for the next leg up. This is not a time to get impatient. It is a time to watch the key levels. Let the weekly structure do its job and understand that major macro shifts take time to build their momentum. And finally, here is our overall conclusion. When you step back and look at the entire picture, the evidence is highly compelling. Dark Defender's weekly analysis shows us a market structure that has completed its healthy, necessary correction and is now resting on multi-year support. We have a clear, mathematically sound Elliott wave count indicating that the explosive wave 5 is currently loading. We have precise Fibonacci milestones to guide us from 0.9327 all the way up to 5.8563 and beyond. Most importantly, we have a powerful hidden bullish divergence on the weekly RSI, proving that the underlying momentum has already turned in favor of the bulls. So the road to double digits is laid out before us. While the rest of the market is asleep, the charts are quietly whispering that the ultimate move is preparing to launch. So stay patient, watch the key levels, and keep your eyes on the macro price. And this finally ends our video. Thank you very much for watching, and see you on the next one, or you might just as well check this next recommended video right here.